Welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down or sideways, by taking only high probability and low risk trades that have maximum forces from the market, sector, industry, fundamental, technical and even seasonality in their favor. I will revisit some trade ideas or market analysis I shared recently and review how that played out. If you stay with me, I will show some stocks getting ready to buy or short and some that you may trade on Monday. You could also trade them on Friday near the close if you could find them in real time using Q systems you could. How do you profit from a V-shaped market recovery? Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. V-shaped market recovery happens when the market falls suddenly and sharply, only to recover equally sharply to the pre-decline price level. It becomes a V-shaped recovery if the low of the move has no base but a pointed reversal like this. It is not easy to profit from that using traditionally used trend following means. Special non-trend following tools are required across multiple dimensions to profit from it. Q has several tools for that. I will go through some of those, showing how you can use them to profit from a V-shaped market recovery. Multiple factors make it hard to profit from a V-shaped recovery. The most obvious factor is that a V-shaped recovery is recognizable only after the V-shape is complete. By that time, one may argue, and I am in that camp, it is quite late to buy that instrument. Stop would be far away. Other instruments may have a low risk buy setup, but not the one that just completed a V-shape. Did we see a V-shaped recovery in the market just now? Yes. SPY fell by more than 8% from the recent swing high and immediately recovered by more than 8%, bringing it slightly higher than the previous swing high. Here is the chart for that. After this uptrend in SPY daily chart, it made a lower high and came down sharply. This down move was of about 8.07% from the high of this candle to the low of the lowest candle. Then, without making a base, without moving sideways for a few days, it sharply moved up, went up by 8.66%, and the closing price on Friday is actually higher than the closing price of the previous swing high. That is a V-shaped recovery. You may notice that during the recovery, I marked that out already, the volume was lower. During the decline, volume was higher. That low volume notwithstanding, it is still a V-shaped recovery. Is it too late to buy? At least for stretch indicator, it is overbought for 2 days. When was the best time to buy? By the time we recognize the V shape as complete, it is already too late. Where was the best time to buy during this up move? We'll find that out soon. To profit from a V-shaped recovery while keeping risk low, one needs to start buying before the V-shaped recovery is complete, as we just saw. If the V-shape is already complete, stop would be far away. Q has multiple ways to pinpoint the day when you may start buying. It uses a pattern formed from signals from many dimensions. So there are signals from market external analysis, market internal analysis, bucket analysis, technical breadth, sector industry stock, SIC, that is sector industry stock breadth, etc. Signals from all of them create a pattern, and that pattern from all these dimensions can be used to pinpoint the day when you could start buying. This is true for every V-shaped recovery, and it is true for the current recovery as well. What is the pattern or patterns? Q patterns that make a profit from a V-shaped recovery. Bucket analysis in Q edge becomes so oversold that a recovery is likely. This is what we see at the lowest point of the market decline. This can be observed in two ways, the oversold condition in bucket analysis. One is that 30 to 40% of stocks are in the lowest bucket below the lower Bollinger Band. Bucket analysis shows that in a graphical form. The other is that more than 10% of stocks drop to the lowest bucket in one day. So any of these two conditions show that the market is too oversold and a recovery is likely. The two above points are valid on both real-time and end-of-day bucket graphs. Those may differ slightly as the bands are recalculated after the close. Such extreme oversold condition was probably true on 5th August, the low of the V-shape, but that itself was not a trigger to buy. More Q confirmation was needed from other dimensions to start buying. So bucket analysis was one dimension that would help us to look for reversal points because the market was too oversold. But that is only one piece of the puzzle to profit from a V-shaped recovery. What are the others? Momentum signals. Another part of the Q patterns that make a profit from V-shaped recovery. Q traffic light candle color on the entry daily chart shows momentum. It is responsive and useful for swing trading. Most Q trade setups use this momentum as a checklist condition. If momentum is not in our favor in one way or another, we may not buy. Most checklists include that, most trade setups. If the traffic light candle color is bearish or red, one may not buy it immediately but wait. The only exception is a bounce long setup, that is an exhaustion based long setup. There we don't need the traffic color to be green or even yellow. All other queue trade setups like flow, headwind, box, etc., they prevent buying on red traffic momentum. Tying it back with bucket analysis, if bucket analysis showed extreme oversold condition and recovery was likely, it showed extremely oversold condition, that means the momentum was probably bearish, traffic light was bearish. One could expect a turnaround, but one still had to wait for traffic to turn at least yellow, neutral. Maybe green also, but at least yellow, neutral. When exactly did that happen for the market ETFs? We'll soon find out. More patterns that make a profit from a V-shaped recovery, and very useful pattern, the stretch signal that shows overbought oversold condition. Part of the pattern is stretch oversold on a market ETF and then a bull release, the oversold condition giving way to bullish move. Stretch and bull release. Because it is a V-shaped decline and then recovery, very sharp decline, the market will become oversold at the low point shown by the stretch signal, and that is not a time to buy yet. We wait for a bullish release. That is part of the pattern. It is more reliable if multiple market ETFs show the stretch oversold followed by bull release around the same day. Did it happen? The market made a low on 5th August. All the 4 market ETFs, SPY, QQQ, DIA and IWM, were oversold in terms of stretch signal. This signal is available on the Q entry daily chart. So it was oversold on 5th August and it was not yet time to buy. We had to wait for a bull release that came on 8th August. All 4 market ETFs displayed bull release on the same day. We'll look at the chart soon. And that was a time to find buy candidates as far as stretch and release are concerned. But that is not the last of the patterns to profit from the V-shaped recovery. Support and resistances have tremendous value in Q trading. In any trading, and Q implements the support and resistances remarkably well in my view. So they are part of the patterns to profit from a V-shaped recovery. How? At the low of the V decline, market ETFs come to support and hold at the low point, some kind of support. Or it may break the support and then immediately recover, creating a false downside breakout. So it may hold the support without breaking, or it may break and then immediately create a false downside breakout. That holding of support of some kind is essential. Like in case of stretch release, it is more reliable if multiple market ETFs hold support around the same day. Valid supports are memory trend line, works remarkably well, watermark pivot identifies the double bottom or triple bottom, and the two of the direction lines, yellow and white direction lines, they don't help in identifying immediate trend of the market. That is what I explained in the last market recap on how to identify trends. The white and yellow direction lines are slower direction lines. They don't identify the immediate trend, but they act as marvelous supports and resistances sometimes. In this case, support, because we are talking about recovery, V-shaped recovery. Did such supports hold, or did they create false downside breakout for the market ETFs at the recent bottom? If so, what was the exact time to look for buy candidates? Let's use the Q weekly, daily at a glance charts to find out. And to make it easier, I snapped all the pictures this way. S&P 500 ETF SPY using weekly, daily at a glance chart, weekly on the left, daily on the right as usual. Point 1. SPY created a false downside breakout at the watermark support. Point 2. It created another false downside breakout at the trend line, memory trend line support. It closed above both on which day? If you watch it carefully, it closed on both the watermark support and the trend line support with a bullish shape candle only on this day. Earlier, the candle shape were bearish, so only bullish shape candle after the false downside breakout was on this day, that was 8th of August. What came on the same day? A bull release. Earlier, it was oversold, shown by stretch, and then a bull release happened on the same 8th of August. What about candle momentum color? That also turned green on the same day, 8th of August. That was the day, optimal day to start looking to buy. All the things came together. Support held, or it created a false downside breakout. Momentum turned bullish and bull release came right after the sharp decline. That was the first possible day to look to buy, 8th August. Now we are on 18th August, Sunday. Friday was 16th August. How is it looking at the right edge? It moved up, created a V-shaped recovery, but is it in an uptrend? No, it is not in an uptrend. Again, last week's session was on how to identify trends. You may look at that again. It is not in an uptrend because it does not have higher high, higher low. Is it in a downtrend? No. The downtrend is now broken because the trend line resistance is broken. Also, we have a slightly higher high now, but we don't have higher low. So it is neither in a downtrend nor in an uptrend. Recent swing low is very far away. There is no low risk buy point in SPY right now. So we looked at the optimal day to buy during the recovery. That was 8th August for SPY, and at the right edge it is too late to buy. What about the other market ETFs? QQQ. Held the memory trendline support. Held the white direction line support. Notice in this case, it did not have to create a false downside breakout. It held the support for both of them. But when it held the support, that candle itself had red momentum, we wouldn't buy there, as I explained. The first day we had at least neutral momentum was on this yellow candle. That was 8th August. What happened also on 8th August? After being oversold, the bull release came on 8th August. So all the three angles allowed us to buy no earlier than 8th August. That was the first day to start buying as far as QQQ was also concerned. Same was true for SPY. What about right edge? It created a false, sorry, not false. It created a V-shaped recovery, closed higher than previous high. However, it is not in an uptrend because it does not have higher high, higher low. Specifically, it does not have higher low. Is it in a downtrend? No, the trend line resistance is broken, so it is neither in an uptrend nor in a downtrend. The recent swing low is very far away. Stop loss will be far away. And I forgot to mention that in case of SPY in the last chart, SPY was overbought already for 2 days. QQQ is also overbought for 2 days. So there is no low risk buy point in QQQ as well. DIA. DIA held the weekly memory support. Didn't have to create a false breakout. It held the weekly memory support. However, in daily, it broke and then immediately created a false downside breakout. But that candle, momentum was red, we wouldn't buy. The first candle with at least yellow momentum was on this day. That was also 8th August. In addition, we had the bull release after being oversold. So for DIA also, the first day to start buying was 8th of August. What about at the right edge? Completed the V-shaped recovery, but it has a trend line resistance nearby, doesn't allow us to buy. It also has lower high. Unlike QQQ and SPY, which had slightly higher high, here we are continuing to have lower high, not in an uptrend at all. It is overbought for 2 days shown by stretch, and the recent swing low is too far away to allow a low risk entry. So now it is too late to entry for longs, and the optimal day to buy was 8th August. Lastly, IWM. Here also the weekly memory support held. These memory supports work remarkably well, and I mentioned about these memory supports in the previous market recap, showing IWM and DIA both were holding them in weekly, and in IWM it held the white direction line and the watermark support both. It held. It didn't have to create a false downside breakout. It held both of them. But the candle, when it held the two supports in daily, that was 5th August, the momentum color was still bearish. The first candle, when we had at least neutral momentum, that was on this day, that was also 8th August. And we also had on 8th August, after stretch oversold condition, the bull release. So for IWM small caps also, the optimal day and the first possible day to start buying was 8th August. What about at the right edge? Here it didn't complete the V-shaped recovery. So from that angle it is weaker. All the other market ETFs, especially DIA, no, not DIA, especially QQQ SPY, completed the V-shaped recovery. DIA pretty much completed the V-shaped recovery, but IWM did not. So from that angle, IWM is weaker. However, from another angle, IWM is stronger in the sense that it was never in a downtrend. It never had lower high, lower low. I explained that in the previous market recap. That was about identifying trend and trend change. So it never had lower high, lower low, and now also it is continuing with higher high, higher low. Because the trend line support is there, we have to know that there is higher low, from here also higher low and higher high. So this is the only market ETF that did not complete the V-shaped recovery, but it is also the only one that did not turn into downtrend. So it is giving mixed signal. At the right edge, there is no buy setup. What I would like it to do for trading purposes is for it to pull back a bit, hopefully come to the weekly trend line support and go up again, or if not that much, it may come to the yellow direction line in daily and go up from there. Either of those situations will allow me to buy small caps. Again, not right now. Fridays and Thursdays candle shapes are also indecisive. I'm not going to buy IWM at present. That was not all. That was an external view of the market, but that was not all that helped us buy, helped me buy, could help you buy if you did not buy on 8th August. But more patterns were there from Q to enable that. Mega caps. Mega caps have a tremendous influence on the market. Observing the Q mega cap index, custom index, for similar patterns, that is stretch and release, support holding, or at least creating a false downside breakout, traffic color changing to at least neutral, etc. Observing those on mega cap index would help to further time the market. It would also indicate if mega caps were the preferred buying candidates when the V-shaped recovery was starting. So two things. One is to observe the mega caps to have more confidence to buy stocks in general, and further to know if we could buy mega caps or we could focus on other stocks. How did the mega caps do in the V-shaped recovery? Let's find out. Mega cap custom index from Q market breadth. Again, the weekly memory trendline support held, did not create a false downside breakout. Even the daily memory trendline support held. Which day was that? 5th August. But 5th August candle color, momentum color was still bearish, you wouldn't buy. Here the momentum color changed to neutral on 6th August, not 8th, 6th August, and we had the bull release after stretch being oversold on the same 6th August. So as far as mega caps were concerned, the bullishness or the recovery signals that allowed us to buy came earlier. So we could start to buy mega caps, in fact, sometime earlier if we looked at mega cap custom index chart. Of course, we wouldn't look at only mega cap custom index chart. We would need more confirmation from the market external view that I showed, and I'm going to look at some more Q patterns that would give us complete confidence to buy. And would it be 6th August? Probably no. After looking at everything, it would probably end up being 8th August, by when the mega cap custom index turned green. Some of the market ETFs turned yellow, but mega cap custom index turned green. So it was continuing to show relative strength, the mega cap custom. So we could probably buy some mega caps first on 8th August, provided we had a low risk buy point in individual mega caps, and then look at other stocks as well. What about the right edge? It completed the V-shaped recovery, but it is not in an uptrend yet. Even if we think that we have a higher high on a closing basis, we don't have a higher low. So it is not in an uptrend yet in spite of the V-shaped recovery, and that is quite common. Is it in a downtrend? No, not in a downtrend anymore because the trend line resistance is broken. It is overbought already, shown by the stretch indicator, and the recent swing low is too far at the right edge, neither in an uptrend nor in a downtrend. There is no low risk entry point. It's too late to buy now. More Q patterns that make a profit from a V-shaped recovery. The market ETF's external view and mega caps, however useful, they are useful certainly, however useful they were not enough, and they are never enough to confidently start buying near the low of the V shape. Not enough. Very useful but not enough. There is something even more useful, that is the market internal health check, and that was not only useful, that was essential to have before one could start to buy. Only the internal health being bullish could give enough confidence to start buying when everyone else was worried about the market falling further. We needed to check the internals. How did Q breadth charts help in that? Tremendously, as usual. And let's find out more about that. Composite breadth charts. NASDAQ and NYSE. Both NASDAQ and NYSE, the 3-month new high low, extremely useful oscillator, works like a clockwork. I show that often, you see that often, thanks to Mr. Dr. Jeffrey Scott, from whom I learned about how to use it. Which was the day when the composite breadths became so oversold that a recovery was likely. That was 5th August. But extremely oversold did not mean we could buy immediately. Very next day, it ticked up for both NASDAQ and NYSE. Very next day, that was 6th August. But that still was not the day to start to buy. One had to wait to see more breadth confirmation in terms of accumulation and or Eureka. When did it come? We'll soon look into that. But before that, let's also look at the major index breadth. Here, two indexes, Russell 2000 and Dow Jones Industrial, hit the extreme oversold condition in 3-month new high low, that recovery was likely. And Russell 2000 tilted up the very next day. So oversold was on 5th August, just like in case of the composite. Very next day it tilted up 6th August, but that itself again was not enough for us to buy. We had to see accumulation count and or Eureka. And Dow Jones Industrials is the major index that has minimum number of stocks. So I look at the breadth charts, but don't rely too much on the oscillators on Dow Jones Industrials to decide my preferred trading direction. So yes, it became extreme oversold in 3-month new high low, but I would discount that in deciding my overall market preferred trading because it has very few stocks. Now comes the broadest of all custom indexes, that is USA total view, and this is the at a glance weekly daily chart of the USA total view, weekly and daily. The weekly held memory support, did not create a false downside breakout, held. Daily created a false downside breakout at the watermark support. It broke but very quickly recovered. the first day that it closed decisively above the watermark support in daily as well as memory trend line support in weekly with a bullish shape and at least neutral color candle was on this day. Which day was it? That was also 8th of August. So total view was also telling us to start buying on 8th August, not before that. We also needed a stretch release, bull release that came on 8th August after being oversold. So from all the angles we have seen so far, external view using ETFs, also internal view using composite breadth, major index breadth and total view breadth. The optimal day to start buying was 8th August. What about the right edge? It created the V shape, but it is still not in an uptrend. Does not have higher high, higher low. Is it in a downtrend? No. Trend line resistance is broken. Is it overbought? Yes. The recent swing low is very far away. So optimal day once again to buy was 8th August at the right edge. It is too late to buy. And the most useful of all breadth charts. Some of the signals are from Mr. Ian Woodward. Great invention. I incorporated them in Q breadth charts, Bingo, Eureka, and few other signals, but relevant to current discussion, Bingo, Eureka. Let's study them. Total view custom index dropped sharply at the low of the day, that was 5th August, came, I marked it number 1, distribution count of 6, the largest distribution count possible. So everybody was selling across the board. High volume selling across the board, across everything, 6 distribution count. And on top of that, it gave this bingo signal, thanks to Mr. Ian Woodward, who invented it, may him rest in peace. Bingo is termed as, is explained, can be read as indiscriminate selling of everything, even those of value. It can be explained as throwing even the baby out with the bath water. Everybody was selling. That was the time the 3-month new high low also got oversold. That was the time stretch was oversold. That was the time price was hitting support or creating false downside breakout. That was too oversold. A recovery could come, but these signals, distribution count and bingo, does not tell that a recovery may come. Support tells more about that. 3-month new high low tells more about that. Bucket analysis tells more about impending recovery. But bingo and distribution count themselves don't talk about impending recovery. The signal for recovery comes from two other aspects, that is the accumulation count following distribution count bingo. When did it come? On 8th August, accumulation count of 4. Also Eureka came on the same day, 8th August. Eureka is also invented by Mr. Ian Woodward, may him rest in peace. It is understood also, it is understood as an alternative to follow through day of canceling methodology. So from USA market breadth total view point of view, also internal health check, the first day one could start to buy, and this time with quite high confidence. After looking at external view, after looking at mega cap, after looking at composite breadth, after looking at major index breadth, we still had to wait for something. That something came from this total view chart in terms of accumulation count and Eureka. Any of them would be okay. We had both of them. So 8th August again was the day to start buying. What about the right edge? We see more accumulation counts have come on Thursday and Friday. even one Eureka has come on Friday, but Eureka, after the market recovers, creates a V-shaped recovery. That is not something to use for buying. As I showed from multiple angles, it is already a bit late to buy. Is it bearish? Of course, no. Across the board, there is no bearishness, but it is a bit late to buy. You could further gather you could gather further insight from Q technical breadth in Q finder and sector industry stock breadth in Q edge about an impending recovery at the bottom of the V shape. You may learn more from my recent videos about that, videos like how to anticipate reversal and others. I will not go through them again, how to anticipate reversals using technical breadth and sector industry stock breadth. I will not go through that in today's session. They are on my YouTube channel, Trading Profitably. And now looking back in last week's market recap, just after 8th August. 8th August was Thursday. My weekend market recap was after Friday's close. I mentioned some of those same Q signals as reasons I was buying. And not only in last market recap, the week before that also, I only shared buying candidates. Notice how I was able to use reversal signals to buy at the low, not after the V-shaped recovery is complete. Now I am reluctant to buy, not going to short also, but I could buy earlier. And the same signals that I explained today, I showed them in the last market recap as reasons why I was buying while others were probably fearful. And specifically in that recap, I had mentioned accumulation count and Eureka at least 3 times as reasons for buying. These two were essential. However, confidence I might get from other Q signals, which were also very useful, but the final confidence came from accumulation count and Eureka in the breadth total view. At least 3 times I mentioned that in the last market recaps video, or was it more? Probably more. You might check that out. More times I mentioned about the importance of these signals. Those breadth signals taken together, whether it is mega cap index, total view index, and the different breadth charts, they were essential. I cannot emphasize it anymore. They were not nice to have, but they were essential to have the confidence to buy near the low of the V shape, and it helped to pinpoint the exact day to start buying. The traffic momentum, bull release, and holding support are equally important, of course, to have the confidence to buy. They are additive. We could not do with one and leave the other. We could confidently buy and profit from it. I did that. You could do the same if you had used the same Q patterns. If you did not use it this time, I explained the analysis in detail. Hopefully you can do the same when the next V-shaped recovery happens. I am making this detailed presentation with that hope in mind. What is the current market trend? We saw that not in an uptrend yet overall, not in a downtrend too. Is it still okay to buy? Are there low risk buy candidates? No, if we look at the market level instruments, none of them are at a low risk buy point. Is it better to wait for a pullback? I would prefer that, like I explained in case of IWM, or I would prefer to have at least a sideways move from here and then a breakout to the upside before buying again more. I have looked at some aspects, market external view, market internal view, but we'll look at some more aspects in today's live session to see if we have some buy candidates at all. If we are going to trade, we'll still trade in the long direction. So far, we did not see any bearishness anywhere. But we have few more market dimensions to look at. We'll do that shortly. Greetings, I'm Sagar Nandi, retired IT professional swing trading stocks in the USA as well as India markets using only one trading system, Q, and its techniques. You may contact me using my email IDs info@superiorprofit.co, tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, YouTube channel Trading Profitably. All these are open to the public. Most welcome to make use of them. Q runs on Metastock and Registration. It has multiple components. I'll use many of them in today's session. Some I have already explained through the slides. Let's now look at some other market level analytics, starting with Q Edge, sector industry stock breadth. 5-day period bullish across the board. That is this week. 10-day period longer term bullish, but 1 month period is bearish. That is showing synchronization with what we saw in the external view of the market. The trend is not uptrending yet. Yes, it created a nice recovery, V-shaped recovery, but it is not uptrending yet. Longer term 1 month is still bearish. 2-day and 1-day are also bullish, not bearish. If 2-day, 1-day started to decline, turn more red than green, then one could start to think of taking reversal short trades, but that is not true. The charts did not allow us to short. Sector industry stock breadth does not allow us to short. Bucket analysis. At the low of the V-shaped move, as I explained, the bucket analysis was oversold. So much that a recovery was likely. Now that recovery has happened, an excellent recovery you may see. Almost none, 0.1% only of stocks are below lower Bollinger Band. A huge recovery. It is bullish. So 0.1% of stocks only below lower Bollinger Band, and bullish because 57% of stocks are above mid Bollinger Band. It is bullish, but it is not hugely bullish, just 57%, not like 80%, 90%. So it was a recovery, a fantastic one, but it was a recovery still in a downtrend. Not downtrend, not uptrend, not downtrend. It just created a V-shaped recovery. Not superly bullish. It may go up more. That is what the bucket analysis is telling. What about technical breadth from Q Finder? Weekly interval. Technical breadth is bullish across the board, and here it is looking overbought. Whenever we see all the categories are at 80-90% or more together at the same time, that is an overbought condition. That is something to be cautious about. At the same time, I see the headwind alert. Whenever the headwind alert comes in the weekly interval, that means more upside is likely. So there are two stories here. One is more upside is likely in what stocks? Those stocks which displayed weekly bullish headwind or similar stocks. Which price level are they? They are at a very low price level. Headwind comes at a low price level in a downtrend, and this is weekly interval, so very low price level. Those stocks may go up more, but for all stocks in general, we have some reasons to be cautious because it is looking overbought. So I may look to buy, if I am still buying, I may look to buy stocks at a very low price level. The headwind signal gives additional confidence for that. For stocks that are already up, the overbought condition does not give us confidence to continue buying. What about the daily technical breadth? That is also bullish other than reversals, but the absolute number of reversals are very low. So we have to say that if at all we are going to do swing trading now, it has to be in the long direction and looking at the weekly headwind, probably in stocks that are at a lower price level. What is the overall summary from this market level? We can continue to hold existing long positions. I am doing the same. No reason to start shorting. If buying, need to be cautious. Prefer to buy stocks at lower price level, and I'm reluctant to buy too many. I'll be happier to buy more if the market ETFs create a higher low and go up. That will complete the uptrend with higher high, higher low. So I will wait for that before buying too many, but I may look at some buying candidates today also. Let's start with dollar index though. And I'm going to look at it using weekly, daily. The memory trendline supports are of great value in analyzing any instrument, and that is true for dollar index also. Dollar index weekly, daily at a glance chart. This week it came down. That supported stock market going up. Doesn't always work like that, but it is useful to keep an eye on. It is not the only impact, uh, the only instrument that is having impact on market. There are other factors. In general, dollar coming down tends to help the market, and dollar came down this week, but now it is right at the weekly memory support, very close to daily memory support, and we have a bullish headwind signal. No trade setup, but bullish headwind signal. If the supports hold, that may put pressure on the market. If the supports break, that will be bullish for the market. Now, even if supports hold and go up, I see that there are many resistances not very far away. Resistance from memory trend line, resistance from yellow and white direction lines both. So I don't think it will be easy for dollar index to pierce through all of them right away. Even if it goes up, it will likely decline, and again that may help the market. So that is going to be in sync with my expectation of having a higher low in the market ETFs. Dollar index may go up, putting pressure on the market. The market ETFs may come down little bit, and when dollar index reverses from the resistances, the market ETFs may create a higher low. That will be my optimal time to start buying a lot of stocks again, or many stocks again. Lot and many, they may mean different things for different people. I'll buy more if that pattern in dollar index matches up with the pattern of higher high, higher low in market ETFs. See how I'm anticipating moves and getting ready. The same analysis, kind of analysis, helped me to buy stocks for last several weeks, and that analysis is telling me not to buy too many now, but if at all I'm trading, I like to buy. Last week I shared only two trading ideas. One was BEN, another was DRVN. Remember, I put it in the sidebar in the last market recap. I mentioned in the weekend recap last week that I did not buy those stocks, so I kept them in my watch list. I tweeted on Monday, that was this day, that this is Ben. It did not allow me to enter the buy position on Monday because it fell below early range low in precision entry chart. but very next day, that is Tuesday, it allowed me to buy because the stop was not hit. After the signal, on which day I did not buy, I tried to buy on day after signal day, on Monday, using precision entry, fine tune chart, early range breakout did not allow me to buy as it fell sharply. Next day, it created a bullish headwind that allowed me to buy. And if you did that, it has gone up enough to cover the risk distance. You could book profit. I have booked profit in BEN. Notice this was also a stock in a downtrend. I bought it when the V-shaped recovery was ongoing, not after the V-shaped recovery is complete, and I have booked profit now. If you look at weekly, it is looking very bullish, closed right at the high of the day, high of the week. But I have booked profit, and DRVN was the only other stock I shared in the last market recap. From the weekly, you can see it also moved up. I shared it on Friday, this day. As I mentioned, I did not take a long position on that day. On Monday, I tried, but early range breakout technique did not allow me to buy. The buy was allowed on Tuesday using the technique of buy after recent signal day. It did not go below the trend line support, did not break the stop, and it gave a bullish shape candle on Tuesday. That is an entry technique I call entry after recent signal day. The stop was not hit. I got a better fill price than the signal day, and I had a bullish shape candle. So that is a technique I call entry after recent signal day. Tuesday allowed that entry, and again, if you took that by Friday, you covered more than risk distance. You could book at least partial profit. I have booked full position profit in the stock. So two stocks I shared in the last market recap, both worked out. And this week, let me share two stocks again. Let's look at their complete analysis. One is BHP. Look at its chart also. BHP. BHP Billiton. What am I looking at? Bullish indecision in weekly. More importantly than that, bullish headwind in daily led to a small price up move, created a higher low, went up again. Thursday gave a bullish headwind, but it did not break the trendline resistance yet. I could not buy it on Thursday. On Friday, it broke the trendline resistance, and that happened at price extreme low. Price extreme low here and jump thrust low. Recovery was likely. Recovery is still a likely situation. So I bought a position in BHP. As I mentioned, this analysis can be carried out in real time. I did it in this case, and I took a stock long position in BHP on Friday. This is a breakout long setup, and I am using also the likelihood of going up from price extreme low, jump thrust low, and having the bullish headwinds. And I noticed on Friday there was some positive news on BHP. That news was that some plant location strike was called off. Not only that, I noticed that it is a 3-star buy candidate in terms of Q Vital fundamental score, undervalued stock with very high earnings growth. So that is a 3-star buy candidate. Funds are buying, has a high dividend yield of 5.7%. So that allowed me to buy in terms of fundamentals, and I looked at the industry score. You saw the stock is at a very low price level. Remember my Q finder weekly headwind signal conclusion? I prefer to buy stocks like that, and the stock is at a low price level. I don't expect the industry to be very strong, but I need at least acceleration, and that is present. And it has a nice dividend yield, it has some positive news. The risk is very low. We saw the market ETFs recovered nicely, but they are not a low risk buy point. But this is at a low risk buy point with a nice dividend yield, almost 6%, has positive news, has a breakout setup at price extreme low, jump thrust low. So I took a long position in this stock on Friday. Let me save it. It's not to show that every trade is making profit or not. That is not my aim. Not in my own trading. Certainly not an aim to show in the market recaps. I'm just showing a disciplined way of trading. The other stock that I analyzed and I bought on Friday was Xerox. XRX, Xerox Corporation. Let's gather the fundamental scorecard for that also. Let's look at the technicals. This is also a breakout buy setup. We also had bullish flow. This is a stock which is similar to BHP in that it is at jump thrust low, price extreme low. In addition, it had big move up 3 already, at which point we had the bullish headwind. Price nicely recovered enough for a swing trade, profitable long swing trade, and after that it dropped. And I checked out the dates from Icon. I use Icon for all stock research analysis. The earnings came out here, and after earnings it fell, came to jump thrust low, price extreme low again, and just now it is about to regain the watermark support, the support that had the bullish headwind that led to a price up move. It had something to do with earnings, that price dropped, and I would have preferred that Friday completed the false downside breakout, but it did not. I actually took a position in Xerox and also in BHP using precision entry charts. I was hoping that Xerox would complete the false downside breakout on Friday, but it did not. But I am holding the long position. Here also you notice stop loss is narrow and I have trend line support nearby. I have also bullish headwind in weekly. I'm anticipating a false downside breakout. In terms of fundamentals, it is undervalued stock. The best score possible, that itself is not enough. It has very high dividend yield, almost 10%, and it's a profitable company. It's at a low price level, but it's a profitable company. It has a short squeeze potential, and industry wise it is much stronger than BHP. 79% of peer stocks went up. In itself, the industry was strong on Friday, and I noticed though earnings growth is negative, it is improving. That is a reason I consider for buying. A revenue growth negative, but it is improving. Very nice dividend yield, very nice for me. And I check the industry score from QH. Should be much stronger than BHP's industry, and it is so. This strength allows me to buy. So I found these two buy candidates on Friday. Both were low risk, and I took long positions in both of them. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today, just as you would almost every other day. Today I did not take too long compared to last few market recaps. Still, I am at 1 hour 5 minutes. If you are still with me, you are great people, amazing traders. Thank you for that. Thanks for joining me today, and I look forward to seeing you in my next session. Have a great weekend, and as I always say, as these live sessions, live examples, live trade ideas, I think certainly shows there is no reason not to do that. Trade profitably. Thank you.